Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Phil Mackintosh, Chief Economist at Nasdaq, for an update on the latest COVID-19 news, the U.S. and global economies, and how markets are digesting the progress of reopening the economy. And Phil, the question is, how well did the market and economy perform as the second quarter of 2020 comes to a close? Actually, our first quarter exclusively working from home, closing and reopening the economy. It's really been a crazy 3 months.
It has, hasn't it? And it'll be interesting to see just what the real data in terms of the P&L for all the different companies turns out to be. Remember, we saw a pretty disperse range of results when we had the Q1 earnings, and that was just from a couple of weeks of shutdown. We already know from a lot of the data that some sectors and some industries have been hurt way more than others. And so now that we've seen 3 more months of this and a relatively slow uptick, even though it's definitely where we've seen an uptick since April, it's going to be interesting to see which sectors have recovered better than others. So earnings season this time around and in July is going to be pretty interesting to watch. The data that's coming out now actually looks like the V-shaped recovery is not going to happen. It's a bit more of a swoosh shape. You can see that the economic activity indicator that the New York Fed does, which tries to estimate where GDP is going to come in for the quarter, has come off its lows, down more than 10% for the quarter because of the recovery. But then when you look at the rate of a lot of returning to work and a lot of hours worked and a lot of even new job postings, which we look at today, it is more of a swoosh shape. So we saw a dramatic shutdown just before the start of the quarter, and we've seen slowly things getting sort of back to normal. But we haven't really seen much get fully back to where it was before the shutdown.
How about the state of the consumer? Because the consumer really was the story for 2019 and leading up into the COVID-19 shutdowns.
That's right. And the consumer was sort of driving the services sector by spending a lot in the services sector as well. And basically, we've seen with COVID, the services sector especially badly hit, and the consumer can't be feeling that confident with unemployment still around 13%. So the consumer numbers, we've seen the consumer sort of start to recover in some areas of data, but even the new cases that we're getting coming through the South and the Western states right now, with some of the leading consumer confidence data, is starting to show that turnover just a little bit. Makes sense, because we do know, even from the experience in Sweden and countries like that, where you weren't forced to stay home, just having a rise in risk makes people's behavior change. We've seen it in the restaurant bookings in the South and Western states already. And over the last couple of hours or days, some of those states have started to wind back their reopenings and shut down things like restaurants. New Jersey did the same thing, closing indoor seating of restaurants to customers as well, because it's seen as probably a little bit too risky to start just yet.
Let's go back to what you were saying before with job postings, because they actually are continuing to show some progress, as we can see in this chart.
That's right. And you can see some of the jobs are coming back in the restaurants. Obviously, the restaurants, I remember a chart we looked at weeks ago, showed that the restaurants were one of the biggest employers, but they were also one of the biggest industries in terms of furloughing workers and laying workers off. And so they'd had obviously a huge reduction in sales as well. So that's one reason why getting the restaurants to open is important. But there's a lot of other industries that are getting back. The manufacturing sector looks like it's recovering better than expected. The services sector in general looks like it's recovering better than expected. So the jobs are coming back, not equally, but they're coming back faster than expected. That's part of the reason why the market's been up. And yesterday we saw a really big recovery in the market once we sort of saw how the market opened, and Powell and Mnuchin had some comments ahead of their speeches today that were pretty positive about the recovery and the rate of recovery probably beating expectations. It's interesting because if you look at consumer net worth, that took a really big hit in the credit crisis, but that was mainly because people's houses and the amount of money that they have invested in houses really fell. And obviously a lot of people lost their jobs as well back then. The share portfolios went down 50–60%. So net worth took a huge hit, which is another thing that impacts consumer confidence. And there's some data that shows that because the market's been pretty strong and because the housing market hasn't fallen over this time around, that actually consumer net worth, which supports consumer confidence to a degree, hasn't fallen anywhere near as much as in the credit crisis.
And Phil, if we look on the flip side, however, retail bankruptcies are continuing to rage day to day. We hear about a new bankruptcy each day now.
Well, yeah, and you asked me yesterday about the Chesapeake bankruptcy, and it sort of made me realize there's a lot of data out there about what's going on in corporates at a more granular level. So if we look at, there's been a lot of companies that have been able to come to market for secondary issues. Stock market and bond market has provided a whole lot of cash to airlines, to cruise lines, to a lot of the industries that are in need of cash. We saw in March a lot of companies tapped bank facilities. That may have been part of the stress on the actual bond sector. But also the stock market has done a lot of secondaries as well. So there's been a lot of cases where actually the markets have provided more cash into the companies that are under strain. But it's not just Chesapeake. And when you look at a lot of the companies that are household names in this table here, you can see a lot of the household retail names have already filed for Chapter 11 protection. And it's some pretty well-known names, and it's probably focused in that retail, mall type sector.
All right, Phil, great stuff as always. Thanks so much for joining me on Trade Talks.
Thanks, Jill.
All right, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.